All right, so I'm just going to quickly review these two markets, maybe just two. The first one here is crude, and you see this is the breakout right over here. When is that? 6/1. So June 1st was the breakout. I'm looking for a test of the breakout, and it took out multiple points, 1, 2, 3. So it's and prior to that breakout, you have an absorption area. So you had absorption, ding, 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 breakout. So it's very strong area to play off of because of the absorption and the breakout. So you can see how strong. And also it's coming from a spring of 1, 2, 3. Like it went into a spring position with a false breakdown, and then it rallied, absorbed, broke out. Now it's grinding. And let me just see here. The selling pressure it's not there. I don't see any selling pressure. Look at this pullback, one bar, one brick. Look at this pullback, one brick. Look at this pullback, one brick. Then this pullback came 2 bricks. So there's no selling pressure yet. But when it does happen, you're going to look for the breakout area and see if they defend. What else to say? Nothing else really to say. This area right here, this brick was tested. It was good volume, and it rallied. And there's good, not really. This, we'll see how strong this is. If it encounters any supply. If it does, I'm looking at this accumulation brick right here. That's inside the breakout of the daily breakout. See what happens. So I think it's a good area to take a look at. Taking a look at the 10-tick brick chart, Renko. Ask yourself, all right, when you're examining trends, how do you examine a trend? Well, basically you have two pieces. You have up waves and down waves. How do you examine them in trend? You have two structural pieces. One is a up wave, the other is down wave. And the trend is nothing more than a series of up waves and down waves, making higher highs and higher lows for the most part. As the up waves in an uptrend shorten, you want to take notice. So when you look at the up waves and in the uptrend, how do you tell that trend is having problems and having problems prior to a potential turn down? Well, for one thing, you have to take a look at the shortening of the thrusts. The second thing is the volume. To some degree, the distance also. So that's all you have. Those are 3 factors that you have. Typically, you'll see a shortening of the thrust or the volume is diminishing. And of course, climaxes. So what is the difference? As an uptrend gets weaker, the weakness can be identified in terms of shortening of the thrust, meaning from high to high to high, that it's shorter. It doesn't make overwhelming new highs. The high to high to high decreases. The volume too decreases. So that's 2 ways of identifying weakness in the trend. The third is climaxes. So now, keeping that in mind, even if that does occur, it doesn't mean a change in trend. It could mean that it's ready for a pullback, and supply would still need to enter and prove itself. Like supply, the bears would need to take advantage of that weakness. But anyway, what I mentioned is 3 ways to check. So what we can do is check. Now from high to high to high to high, is it decreasing? The answer is no. Here to here to here to here, it's not decreasing. So there's no shortening of the thrust, meaning there's no evidence that the trend is turning, or that the up waves are getting weaker, or that demand is getting weaker. What about volume? From up wave to the next up wave, the third up wave to the fourth up waves, and I'm talking about the rally waves, not the consolidation inside waves. Obviously the rally waves. This high, this high, this high, this high. What do you see with the volume? It's actually increasing. Is there any indication of weakness in terms of volume? There's no indication in terms of thrust. There's no indication in terms of volume. So, what is there any indication of weakness in demand? There isn't. At least not on this. So, it would be asinine to short. So you just want to chill out and wait. And even so, you know, this is in, and it's very important that on the daily chart you identify markup or markdown or uptrend, downtrend, whatever. However you identify bullishness, bearishness, whatever term you use. This is a markup. This here was an accumulation or reaccumulation area right here. And this is really cool how they did this. All they did was rally, crack, reaccumulate, rally. Over here they had trouble, so they sprung it and then made a new high. Breakout against this area with the BO right there and going higher. So this is in markup. This was the accumulation area, all this squiggle, and this is markup, or reaccumulation into markup. Alright, so let's move on to the next market. Alright, so again you have markup in this market too. This is the YM. It's very clearly in markup. Alright, you have breakout, rally. So over here you could tell you have breakout. I don't see it over here. Never mind. Here you have breakout, rally, pullback, breakout, rally, pullback, breakout, rally, pullback. Here it did a test. So what's likely to happen is either they're absorbing and breaking out, or it'll test, or it'll spring. Who knows? What you do know is this level is holding. That level is holding. And this sideways action looks like absorption, but hey. Alright, so now let's take a look inside and see what's going on. Over here, you see the market accumulated right here. And look at the fucking volume over here. What is this? You see the volume? Then it breaks out, pull back to test against that area. So I'm trying to figure out what's happening here, but again the trend hasn't turned up. Now we go to the smaller brick size. This brick size I think is 100 tick. Now we'll take a look at the 20 tick. And as the market pulled back, you had a rally here. So demand did express itself. Went in the spring, again demand expressed itself. That's twice. Then it comes back down and it just evaporated and eventually it broke down. Now this is the breakdown area right there. The breakout 104. Now what is interesting now is this. Look at this volume. It's excessively large. And what I'm trying to figure out is that volume a climax? Okay. If you see the red here, look at this, the red, and bang! Big red volume, big whatever, big distance. And then it goes a little bit lower to test and it evaporates. The volume here evaporated. Now I don't know what's going on, but I do know that this looks like a shortening of the thrust and it is setting itself up for a rally. Now anything can happen. The rally, the reversal rally has not occurred yet, so this is just speculation. But if the bulls are going to do something, this is the place to do it. Why? Because you had a climactic move which potentially exhausted the sellers. There was a secondary test, and in that test it was very low volume. We went from 358 to 22. Obviously, the test is showing a lack of pressure. The only problem is demand didn't take advantage of that. If you see over here, where are the bulls? Bulls haven't expressed themselves. So that's why you have to back off until the bulls express themselves. Now, all throughout, you see the volume decreasing, decreasing, decreasing. The thrust decreases a little bit. You know, the bulls would have been ready, but this thing occurred where it's either breakdown or climax. I don't know. All I do know is this has a hell of a lot of volume. It does break a level, and it's followed by a low volume secondary test, but the bulls haven't proven themselves, and until they do, you can't even think about entering. But they haven't proven themselves. So this thing can, you know, it can go lower. And this is the first test of that breakdown area right here at 204. And you have that one red brick. So this is why you just gotta chill out and wait. Alright, that's all folks. Thanks.